DK Joshi Johnson right now to speak about his sense of, well, lots that's happened in the past few days. Mr. Joshi, just an initial comment though really on the news bits that we've just gotten that the gold import tax will be cut by Feb end. Now you've spoken about this 2 or 3 times in the last 15 days or last 45 days, but in all probability by this month end we'll see that cut happening.
I think it's if it happens, I think it's a very good thing because you need to, you have till now artificially controlled the current account deficit. And the gold has been one element where you've seen the gold imports come down, but I think it's inflating imports through the unofficial channel. That's the anecdotal evidence that you have. So it is very critical to start tapering it off, and I think I would look forward to this decision. It might bump up your current account deficit a little bit, but I think at least it will make it more sustainable.
Mr. Joshi, coming from a rating agency, how have you looked at the finance minister's budget arithmetic? Are you satisfied? Are you willing to take it as face value? Or are you a little unsettled by what lies beneath those numbers?
Well, I think if you look at the fiscal deficit target, the way it has been achieved, I think if for instance you had not cut the expenditure, let's say expenditures were as budgeted, you would have got fiscal deficit at 5.3% of GDP. So a large part of the cut in deficit has happened because of expenditure. And I think what is a little bit worrying there is that the expenditures, you've not been able to cut the subsidy bill, and it's more of the plan expenditure which is productive in nature. I think that has been cut. And finance minister had very little choice there, because if he wanted to stick to his deadline of or red line of 4.8% of GDP for fiscal deficit, then I think with the revenues shortfall, there was no other way of achieving that. So he cut down the expenditure, something that he did last year and also repeated this year. So, but I think what also happened that we've seen this year that there's some amount of dividend stripping in the sense that the Coal India has given dividend, was asked to give dividend. So that's a one-off item. So part of the correction is also because of one-off items which may not be available next year. And then some expenditures have been pushed over to the next year, which is a regular practice as far as the subsidies are concerned. So I think you met this year's target, but I think next year the climb will be much stiffer, because unless the growth picks up substantially, generating revenues is going to be a challenge. And if you keep cutting expenditures in a weak growth scenario, you basically reduce the growth potential of the economy.
So how difficult does it become for the next finance minister? Because apart from what you talked about, the expenditures being rolled over, you also have the fact that you have the 7th Pay Commission, which will give its recommendations. You have the 14th Finance Commission. You have the National Food Security Bill, and all these additional expenses also. So how difficult will it really be for his successor? Is that 4.1% just a pie in the sky? Will it be closer to 6-7% maybe, which is what we saw under UPA 2, if you remember?
Well, I think we have to wait till the next budget when the next budget is announced, because this has a very short life, and I think within 4 to 5 months the new government will come out with its own budget. I think we'll look at more closely what has been done in that budget, or whether it's sustainable or not, because as I said, this has a short life. But as prima facie, I think our assessment is that for next year, 2014-15, fiscal deficit might end at 4.6% of GDP. And if you want to achieve a lower fiscal deficit, then you'll have to cut expenditures, as you have done in the last 2 years.
So you don't see much possibility of revenue growth happening through GST, through DTC. These are things really cannot really happen in the immediate future.
Well, even if they happen, I think the benefits of them will take some time to flow in. So I think you can't expect a sudden kick. And anyway, I think DTC is not, I think, doesn't have much implication for revenue. It is the GST which is rationalizing and has many other spillover benefits for the economy, in the sense that it will raise the growth potential of the economy as well. So it will be a revenue enhancing measure, apart from a general tax rationalization measure. So I think GST is what one should look forward to. But next year I don't see its impact flowing into the economy. I think if it is done from maybe, I think, after a year or so, you'll see the benefits flow in. It will not flow in immediately, and I think there's still some time. I mean, new government will come, and then I think you'll have to wait for there has to be a lot of buy-in from a number of states. Process on that has started, but I think it's taken more than anticipated time, and I think this might linger on for some more time. But I think there is a general understanding that GST needs to be implemented, and once these bottlenecks are ironed out, maybe it should see the light of the day in the next fiscal year. But the benefits won't be visible immediately.
Well, third quarter. Okay. Our third quarter GDP estimates are actually due on the 28th, next Friday. Have you done any back of the envelope calculations and what it might be? Because after all, for the year as a whole, the finance minister has already said we need 5.2 in the second half if we are to get to that 4.9%. So do you think we'll get to anything over 5% in the third quarter?
Yeah, we might get close to 5%, because I think what you will see is that agriculture growth will pick up. So and the benefits of good monsoons will be visible in the data, and that could keep the overall GDP growth close to 5%. But I think one must remember this is a very mild lift from a very, very weak base. It's not of much consequence for the economy. I think the bottom line is that manufacturing sector is not doing well, industrial sector is not doing well, and that's the biggest challenge we face at this juncture, and that is not going to get resolved even in the third quarter GDP, because for the year as a whole, manufacturing is projected to actually contract, and if you go by that, manufacturing at best will remain flat in the third quarter. It is only agriculture which is going to provide a bump up to overall GDP.
So as of now, you don't see rating agencies changing their view of India either one way or the other?
Well, I can't comment on what the rating agencies will do. We don't rate the sovereigns, but I think what is credible in this budget is that at least there's been an attempt to reduce the deficit. It's sending a strong signal that we want to fix the deficit. Much more needs to be done in the sense that you need to cut subsidies much more to make it more credible, so to say. And but the direction is definitely right, and some more hard decisions will have to be taken to meet the targets in a more credible manner.
Mr. Joshi, just wanted to touch upon the overall inflation debate, because no doubt on account of the food component coming down, we have seen a cool off in the overall inflation. But I think the next key trigger point is going to be the monsoon, and if that comes in normal, then certainly we will see a number below the 8%. But don't you think that that's going to be a crucial factor when it comes to the agri-inflation?
Absolutely. I think monsoons always are critical, particularly more, I think their value increases when there is no other engine of growth. Both from the growth perspective as well as from the inflation perspective, monsoon is critical. But I think let me also point out that even there's something in addition to the monsoons that needs to be done to check food inflation. And one of the reasons why food inflation is so high is that we are just sitting on a lot of stocks, I think, of rice and wheat, and rice inflation is in double digits. I think those stocks should be released, and that will have a very that will depress the artificially high levels of inflation in some of the food items. So I think we should start using the food stocks, because otherwise there is a carrying cost associated with that. Then they start rotting. Why not release them and keep that part of the inflation suppressed? If you do that, I think attaining the 8% target which the RBI is talking of for CPI, I think is very much attainable.
Let's see how the figures shape up. Mr. Joshi, good having you. Thanks so much for taking the time out and being with us and giving us your views.